You're watching Silver News Daily. Subscribe for more.
Did you know the world is sitting on the edge of the largest financial bubble in history? Experts say when this bubble bursts, it could bring chaos to global markets, but there's one metal primed to thrive in the storm: silver. In this video, we'll uncover why silver could skyrocket to unimaginable heights as the credit system collapses. Trust me, you don't want to miss this. Let's dive in.
I think the first thing to understand, and this is a point that actually the central banks understand, is that it's not going up. It's not gold going up. Its currency is going down. So that's the first thing and it's a very, very important distinction. The Bank of China, for example, you think it's buying gold. No, the emphasis is that it's selling dollars and it's selling euros. And other central banks are doing the same thing. I mean, they're not necessarily saying that the whole thing is going to fall apart. What they're saying is that there is now a greater risk in paper currencies, so we need to adjust our reserves accordingly. And so that's what they've been doing. There is also a geopolitical element in it because they can see that Russia and China have accumulated large quantities of gold. If you're a member of the Shanghai Cooperation Organization or an affiliate or an associate, dialogue partner, I think is the term as well, then, in various meetings, you will have discussed gold with, your opposite numbers. And I know pretty well, what the discussion is likely to be. It's likely to be, that the West, the dollar is toast over time. Anyway, we need to move away from the dollar because we don't want the American interference. So, that actually could be rather nasty for the dollar. So we need to have gold to protect our own currencies. So, the whole thing is there. And also, if you go back to the St. Petersburg International Financial Conference back in 22, this was after the West had stolen Russian reserves to the tune of over $300 million. Putin said quite clear, this is what these guys do to you. So don't have your eggs in the Western basket. Be as independent as you can. And furthermore, if you've got any gold stored in, with Western central banks in the Western Alliance, you would be wise to get it out. So you can see that there is a far greater understanding of the role of gold in this current situation than there is, let us say, in Western financial markets. They're beginning to learn. And I mean, I'm looking at gold as we're talking. Today's the 22nd of...
For decades, global economies have been running on borrowed time, literally. Central banks and governments have been inflating a massive credit bubble through reckless monetary policies. Trillions of dollars have been pumped into the system, propping up stock markets, fueling speculative tech booms, and encouraging governments to accumulate staggering amounts of debt. The result? A house of cards that could collapse at the slightest shake. Here's how it works. A credit bubble is created when too much money is borrowed and spent without sufficient backing and real productive value. Cheap loans, low interest rates, and quantitative easing, where central banks print money to buy government debt, have created the illusion of prosperity. But this illusion is unsustainable. Every borrowed dollar has to be repaid, and as interest rates rise, the cost of servicing that debt becomes unbearable. We've already seen warning signs. Bond yields, essentially the interest rates on government debt, have been creeping higher. When bond yields rise, it signals distrust in the financial system. Investors start demanding higher returns for the risk of lending money, and this creates a dangerous domino effect. Rising yields mean higher borrowing costs, not just for governments but for businesses and individuals. Mortgages become unaffordable, loans dry up, and the private sector starts to grind to a halt. This isn't just a theory. Experts like Alasdair Macleod have pointed out that the global financial system is teetering on the edge. According to him, this bubble is the largest in history, far surpassing the infamous South Sea bubble or the 2008 financial crisis. And the reason this bubble is so dangerous is that it isn't confined to one sector. It's everywhere: real estate, stocks, bonds, and even cryptocurrencies. When this bubble bursts, it won't be a slow unraveling. It will be a cascade. Equities will crash, cryptocurrencies will lose their value, and the credit system as a whole will seize up. And the scary part, central banks may not be able to stop it this time. In previous crises, they slashed interest rates and printed more money to stabilize the system. But with inflation already a global problem and interest rates needing to stay out to fight it, their hands are tied. So what does all this mean for you? It means that a financial storm is brewing, and it's not a matter of if but when. In times like these, history tells us that people flock to safe haven assets, tangible, real-world investments that can't be devalued by failing financial systems. And this is where silver begins to shine. Stay tuned, because in the next step, we'll dive into the history of credit crises and reveal why silver has consistently outperformed in moments of financial chaos. Also, don't forget to subscribe for more insights into how to protect your wealth as this storm approaches. Now, let's continue unraveling this critical story.
Well, I don't know. It's going to slow down very rapidly, that's for sure. I think I wouldn't rule out a crash, because as soon as people begin to realize that interest rates are going to go up, I mean, at the moment, apparently, one further cut is discounted in the Fed funds rate is expected in the market later on this year. I mean, that's changed from 2 in this year. They're now expecting 1 in the third quarter, apparently. That's going to go. That's not going to happen. And when people realize this, and I think probably when you see the 10-year US Treasury yield more than 5%, everybody's going to alarm bells. And I think that's going to start collapsing the equity market. And I think the collapse actually could be very, very quick, because everybody is in there. They're in there up to their necks, and more, leveraged as well. And of course, the other thing is that all this stuff is the collateral for the banking system. The Fed is going to be in a quandary, because under those circumstances, it would want to cut interest rates. I mean, every time a bubble has sort of started rolling over, the Fed has cut. But this time it can't. It's not going to succeed. I mean, if it cuts interest rates, the initial consequence may not be fully understood by people, but the effect on the purchasing power of the currency will be anticipated by gold. That is for sure. Gold will, measured in any currency terms, go far higher. But actually what's happening is it's not gold going up, it's currencies going down. And then you will see that, the inflation problem is just getting worse and worse and worse. There will be a shift, I think, out of industrial and tech stocks into mining stocks. And that, again, I think is likely to sort of, if you like, create problems. The move of capital out of equity markets into commodities, if you like, and commodity producers, I think is going to exacerbate the problem. But that's, investment managers are going to realize that under these circumstances, that is the place to be, not in equities. So you could see the switch happening really quite quickly.
To understand why today's financial system is on such shaky ground, we need to look back at past credit crises and the ripple effects they created. History has shown us, time and time again, that when credit bubbles burst, they leave devastation in their wake. Take the 2008 financial crisis, for example. The collapse was triggered by over-leveraged banks and risky subprime mortgage lending. When people started defaulting on their loans, the entire financial system unraveled, causing a domino effect that wiped out trillions of dollars in global wealth. Stocks crashed, real estate values plummeted, and countless businesses failed. The Federal Reserve had to step in with massive bailouts and quantitative easing just to keep the system afloat. But here's what many people don't realize. Silver was one of the few assets that soared during this time. In the years following the 2008 crash, silver prices skyrocketed from $1.10 an ounce to nearly $1.50 an ounce. Why? Because during financial chaos, Investors turn to physical assets as a hedge against collapsing currencies and unstable markets. If we go back even further, we see the same pattern in the 1970s. Back then, stagflation, high inflation combined with stagnant economic growth, ravaged the U.S. economy. The dollar's purchasing power plummeted, and people lost faith in fiat currencies. Silver, along with gold, became a safe haven. From 1971 to 1980, silver surged over 1,000%, hitting a historic peak as the Hunt brothers attempted to corner the market. Fast forward to today, and the warning signs are eerily similar. Like in 2008, global debt levels are unsustainable and speculative investments have pushed markets to record highs. Rising interest rates, much like in the 1970s, are starting to expose the cracks in the system. And just like in those crises, people are beginning to question the long-term stability of fiat currencies. But here's where it gets even more interesting. Silver is no longer just a hedge against economic collapse. It's also an industrial metal, vital to the technologies that drive our modern world. Solar panels, electric vehicles, 5G infrastructure. These industries depend on silver, making it uniquely positioned to benefit even during periods of growth. This dual role, as both a monetary metal and an industrial necessity, is why experts believe silver could be the ultimate asset during the next financial meltdown. When the credit bubble finally bursts, history suggests that silver could once again be a beacon of stability in a sea of chaos. But here's the question. Will the next crisis be even bigger than 2008 or the stagflation of the 1970s? And if so, are you prepared to take advantage of silver's historic role as safe haven? In the next step, we'll explore why silver's unique properties make it a hedge against collapsing currencies and a critical resource in the technologies of tomorrow. Don't forget to hit that subscribe button and share your thoughts below. What do you think will trigger the next crisis? Let's keep going.
You can. I mean, particularly, well, both commercial and real estate will be undervalued, will be undermined by rising mortgage costs, rising finance costs, if you like. They're being seen very much as an extremely profitable investment over long periods of time. And I think that there's still that sentiment that, if you've got bricks and mortar, as they put it in English, you're safe with bricks and mortar. In other words, it's tangible, it's real, it's not some airy-fairy funny share or whatever. So, you've got that sentiment. But the problem is that the pricing of property does depend on the availability of finance and the cost of that finance. And if the cost of the finance rises, then obviously that's going to impact negatively on property prices. So I think that is also something that's going to happen. So, that's going to be no safe haven, I'm afraid.
Silver's value isn't just tied to its reputation as a safe haven in times of financial turmoil. What makes silver truly unique, and even more compelling than gold in some ways, is its critical role in the modern economy. Silver is the metal of innovation, and its growing industrial demand places it at the center of some of the most transformative technologies of our time. Let's start with silver's unparalleled electrical and thermal conductivity. No other metal can match its efficiency, which makes it indispensable in the production of electronics. Smartphones, computers, and medical devices all rely on silver components for their functionality. With the global push toward digitalization and more advanced technology, the demand for silver in electronics alone is expected to surge. But that's not all. Silver is a key material in renewable energy, especially in the production of solar panels. Each photovoltaic cell, the part of the solar panel that converts sunlight into electricity, requires silver paste to conduct energy. As the world accelerates its transition to green energy, countries are investing heavily in solar power to reduce carbon emissions. In fact, according to the Silver Institute, nearly 10% of global silver demand now comes from the solar industry, a figure that's only expected to grow. Then there's the electric vehicle revolution. EV rely on silver in their battery systems, sensors, and charging infrastructure. On average, each electric vehicle contains up to 50 grams of silver, with governments worldwide offering incentives to promote EV adoption and major automakers pledging to phase out internal combustion engines. The demand for silver in this sector is projected to skyrocket. And let's not forget silver's use in medical applications. Its antimicrobial properties make it a critical component in wound dressings, surgical instruments, and even water purification systems. In a world increasingly focused on health and sanitation, silver's role in healthcare is more important than ever. This combination of uses makes silver a rare commodity with both monetary and industrial demand, and while gold is seen primarily as a store of value, silver's dual-purpose nature gives it a unique advantage. During economic downturns, its role as a safe haven drives investment demand. During periods of growth and innovation, its industrial applications push prices higher. So, why does this matter right now? Because the silver market is experiencing a supply crunch. Unlike gold, a significant portion of silver is consumed in industrial processes and cannot be easily recycled. Meanwhile, mining output has remained relatively stagnant, creating a supply-demand imbalance. Simply put, silver is becoming harder to find just as its necessity is exploding. The big question is, can the silver market keep up with these growing demands, or will limited supply send prices soaring? In the next step, we'll explore how geopolitical tensions and deglobalization trends are amplifying silver's appeal as both a safe haven and an industrial powerhouse. Stay tuned and let us know in the comments. Do you
You
think
can.
silver's industrial demand could outpace its monetary role in the
Particularly,
coming years?
well, both
Let's keep
commercial and
going.
real estate will be undervalued, will be undermined by rising mortgage costs, rising finance costs, if you like. They're being seen very much as an extremely profitable investment over long periods of time. And I think that there's still that sentiment that, if you've got bricks and mortar, as they put it in English, you're safe with bricks and mortar. In other words, it's tangible, it's real, it's not some airy-fairy funny share or whatever. So, you've got that sentiment. But the problem is that the pricing of property does depend on the availability of finance and the cost of that finance. And if the cost of the finance rises, then obviously that's going to impact negatively on property prices. So I think that is also something that's going to happen. So, that's going to be no safe haven, I'm afraid.
While silver's industrial importance and safe haven status are undeniable, there's another factor amplifying its potential for explosive growth: the convergence of geopolitical tensions and deglobalization trends. These forces are creating an environment where silver is becoming more crucial and more valuable than ever. Let's break this down. Over the past few years, the world has witnessed a significant shift toward deglobalization. The COVID-19 pandemic exposed vulnerabilities in global supply chains and geopolitical tensions, like the ongoing U.S.-China trade war and the Russia-Ukraine conflict, have accelerated the trend. Countries are now prioritizing energy independence, supply chain security, and domestic production. So where does silver fit into all of this? First, silver is integral to achieving energy independence. Countries seeking to reduce their reliance on fossil fuels are turning to renewables, especially solar energy. The global push for clean energy is no longer just about combating climate change. It's about national security. Governments recognize that renewable energy sources can insulate them from volatile global oil markets and reduce their dependence on geopolitical rivals. Silver, being a critical component in solar panels, is central to this transition. Second, trade tensions are disrupting the global flow of goods, including precious metals. Export restrictions and tariffs are becoming more common, making it harder to source materials like silver. For instance, proposed U.S. tariffs on Chinese-made solar panels and batteries could further complicate supply chains, potentially driving up costs and creating shortages in the silver market. Third, central banks are stockpiling precious metals to hedge against the instability caused by geopolitical risks. In 2024, central bank gold purchases hit record highs, and many experts believe silver is poised to follow suit. The reason? Silver is often referred to as the poor man's gold, offering the same safe haven benefits at a more accessible price point. But there's another layer to this story: rising tensions over critical materials. Silver isn't just a precious metal, it's also a strategic resource essential to modern technologies. As nations compete for dominance in industries like renewable energy, electric vehicles, and telecommunications, securing access to silver will become increasingly vital. This could spark a new era of resource nationalism, where countries hoard critical materials to protect their interests. What does all of this mean for investors? A perfect storm is brewing. On one hand, geopolitical instability is driving demand for silver as a safe haven asset. On the other, deglobalization and resource competition are tightening supply chains, creating upward pressure on prices. The question now is, how long before these forces push silver to historic highs? In the next step, we'll delve into silver's advantages over gold and why it's often referred to as the people's metal. Plus, we'll explore the growing recognition of silver's value among institutional investors. Don't forget to comment below. How do you think geopolitical tensions will impact silver's price in the near future? Let's keep unraveling this story.
By inflation, what we mean actually is a decline in the purchasing power of currency. And that's going to continue. So as to where we are in this bubble, I think we're on the verge of it beginning to collapse. I mean, I think it's topping out. What will make it collapse is the next rise in bond yields. At the moment, having had a bit of a rise, they're consolidating. They've come back a little bit. They will go higher again. And as they go higher, the whole of the credit, the gigantic credit system will come under threat. And the first thing we'll see is that there will be a massive bear market in equities. Lots and lots of money will be lost. I think we'll also see cryptocurrencies come down as well, because crypto are correlating very nicely with the Magnificent Seven tech stocks. It's quite clear that the people who've been gambling in Bitcoin are the same people who gamble in those stocks. It's like a tech stock, if you like. So I think we're going to see that. That's going to be the first sign of it. But rising interest rates, rising bond yields are basically going to undo government finances big time, because governments, and particularly the United States, with a debt to, with a debt to GDP of around about 125, 130%. And the economy is not being productive. This is the other thing, Lucian. The Congressional Budget Office came out with figures earlier this month. Is estimates for GDP and for the deficit. What we're looking at, I mean, realistically, the deficit is going to be about 8% of GDP. They reckon that GDP will grow by 4.5%. Virtually all the deficit is spent into GDP. So what we're seeing is, if you take the government spending out of GDP, the private sector is actually contracting in America. So this is actually, you do the same sum with most of the other G7 nations, and you'll find that France in particular, bad news. Britain, bad news. Italy, bad news. I mean, this is everywhere where you've got these deficits, these nations are going into debt traps, and the biggest debt trap of all is the dollar debt trap, and it's that's going to unwind the entire credit bubble.
Silver holds a unique position in the precious metals market. It's often called the people's metal for a good reason. It combines the wealth-preserving qualities of gold with affordability and accessibility, making it an attractive option for both large institutions and everyday investors. But silver isn't just a cheaper alternative to gold. It has distinct advantages that are becoming increasingly apparent in today's economic and geopolitical climate. Let's start with the gold to silver ratio. Historically, this ratio, representing how many ounces of silver it takes to purchase 1 ounce of gold, has averaged around 15:1. But today it's hovering closer to 80:1, an imbalance that many experts believe signals a massive undervaluation of silver. If the ratio reverts to historical norms, silver prices would need to rise dramatically, far outpacing gold. What's driving this disconnect? One reason is perception. Gold has long been viewed as the ultimate safe haven asset, and central banks have historically focused their purchases on gold. However, this trend is shifting. As central banks diversify their reserves amid geopolitical tensions and inflation fears, silver is gaining recognition as a viable store of value, especially in emerging markets where its affordability makes it more accessible. Silver also has a much smaller market size than gold, which means its price can move more sharply in response to changes in demand. This volatility works in favor of investors during times of financial uncertainty or industrial growth, as even modest increases in demand can cause significant price surges. And here's where it gets even more interesting. While gold sits in vaults as a purely monetary asset, silver has an irreplaceable role in industry. Its dual identity as both a safe haven asset and a critical industrial material gives it a unique advantage in times of crisis. When investors flock to precious metals to protect their wealth, silver benefits. When industrial sectors like technology and renewable energy boom, silver also benefits. Moreover, silver is becoming a favored choice among retail investors. As inflation eats away at the purchasing power of fiat currencies, more people are turning to physical assets like silver to preserve their wealth. Unlike gold, silver is affordable for the average person, making it easier to purchase in smaller quantities. This accessibility has led to record demand for silver bullion and coins, with mints around the world struggling to keep up with orders. But it's not just individuals driving this trend. Institutions are starting to take notice. Exchange-traded funds that track silver are seeing increased inflows, signaling that professional investors are positioning themselves for what could be a historic rally in silver prices. The result? Silver is no longer just an afterthought in the world of precious metals. It's becoming a central player, with the potential to outperform gold in both financial crises and industrial booms. The question for investors is this: with silver's affordability, dual-purpose demand, and potential for sharp price movements, is it the ultimate hedge in today's volatile economy? Next, we'll explore how the fragile state of the global credit system and rising inflation are making silver more critical than ever. Don't forget to subscribe and comment below. Do you think silver could outperform gold in the coming years? Let's unpacking this fascinating story.
It was followed by crises in Europe. You had Cyprus, you had Greece, you had, all these things started going horribly wrong. And again, the ECB said, whatever it takes. That was Mr. Draghi's mantra. So what we now have is we have the accumulation of all these bubbles into one big bubble. And the symptoms of it are really quite clear. I mean, you look at the valuation of equities on Wall Street. They're chasing the Magnificent Seven, the big tech stocks, on a momentum basis, not on a value basis. I mean, if value came into it, you'd be selling Tesla, for example, because Donald Trump's turned around and said, "I don't go for this climate change rubbish. We're withdrawing from the Paris Agreement. Furthermore, we're going to hit China with tariffs." Where are Tesla made? A lot of them are made in China. That market there is diminishing. That's a stock that should be sold under any normal value judgment. But instead, it's at an all-time high. I think it will be sold. Of course it will. But so you can see that's an evidence of a bubble. There's a bubble, if you like, in the equities. And certainly, given that bond yields have already risen, this means that the valuation basis for the equity market is now more stretched than it was in the dot-com bubble back in 2000. I mean, that's quite something when you think that the behavior of people in that dot-com bubble was absolutely extreme. So that's one aspect. Another aspect is the cryptocurrency phenomenon. I mean, Bitcoin. They're going up forever. What are you buying? You're buying some digits. I mean, we had oh, you could buy these sort of I can't remember what they were called, but it was sort of electronic art. It wasn't even that. I can't remember what they called them, but people were paying silly money for nothing, and that's a sign of excess credit. And this is why you have inflation in the system. I mean,
The global credit system is hanging by a thread, and silver's unique qualities are positioning it as a must-have asset in times of financial turmoil. Unlike fiat currencies or speculative assets, silver offers something that modern financial instruments cannot: stability, tangibility, and intrinsic value. Let's talk about what happens when credit bubbles burst, when the system collapses. Trust in traditional financial assets, stocks, bonds, and even currencies vanishes almost overnight. That's because these assets are based on promises, not tangible value. Fiat currencies can be printed endlessly, and stocks are only as good as the companies behind them. But silver, like gold, is different. It has inherent value that doesn't rely on government guarantees or market sentiment. Here's where silver stands out even further. It's a hedge not just against inflation, but also against currency devaluation. When central banks attempt to fix economic crises, they often resort to printing money or lowering interest rates. These measures may provide short-term relief, but they ultimately weaken the value of fiat currencies. Historically, when the purchasing power of currencies plummets, silver prices skyrocket. But there's an added twist this time. Inflation isn't the only concern. Rising interest rates are exposing the cracks in the system. Higher rates increase the cost of borrowing, putting immense pressure on governments, businesses, and households already buried under debt. As defaults and bankruptcies rise, the entire credit system could seize up, leading to a financial crisis far larger than 2008. In this environment, investors rush to protect their wealth by converting cash and paper assets into physical stores of value. Silver's affordability compared to gold makes it a natural choice, particularly for middle-class and retail investors who may not have the means to purchase gold. This broad accessibility gives silver a unique edge in times of crisis. And let's not forget about supply constraints. Unlike gold, a significant portion of silver is consumed in industrial applications and can't be easily recovered. This means that even as demand for silver skyrockets during a financial crisis, the supply may struggle to keep up. With mining output already lagging behind demand, any increase in buying pressure could send prices soaring to historic levels. Silver's potential to thrive in both economic booms and busts makes it one of the most versatile assets in the market. It benefits from its industrial demand during growth cycles, and from its safe haven status during financial crises. This dual role is why many experts believe silver could significantly outperform other asset classes in the years ahead. So here's the key takeaway. As the global credit bubble continues to grow and the financial system becomes more fragile, silver isn't just an option, it's a necessity. Whether you're looking to hedge against inflation, protect your wealth from a collapsing credit system, or capitalize on industrial demand, silver is uniquely positioned to deliver. In the next step, we'll dig into how institutional players, including central banks and ETF, are influencing the silver market. Their moves are setting the stage for what could be a massive silver bull run. What do you think? Are we heading for a financial storm where silver will take center stage? Let us know in the comments, and don't forget to stay tuned as we keep breaking this down.
which creates credit in the economy. Um, And there comes a point where that gets a little dangerous, and then banks think, well, we've got too much risk on our balance sheet. And the two ways in which they can compensate for that, basically, are to lend money to the government rather than the private sector, and also to increase the rate, the interest rate, which they request private sector actors to pay. And that leads to, if you like, a turnaround in the economy. So, you have an economy which, is expanding, and then suddenly it starts contracting, as it were. Contracting in the sense that because credit is redirected towards government borrowing, you find that the private sector ends up in trouble. Now, this is a cycle of bubbles which has been going on since the 1980s, and particularly none of the bubbles have been allowed to wash out the malinvestments, the zombie companies, the companies which shouldn't survive because they don't actually produce what consumers want profitably. So those are the companies that should get wiped out every time the bubble bursts, as it were. But the bubbles haven't been allowed to burst. Each bubble has fed into the successive one. So each bubble has got bigger and bigger and bigger. And we saw a very big bubble accumulate by the time 2008, 2009, sorry, which manifested itself in a property crisis. That bubble was never allowed to burst. I mean, the Fed sat there with its checkbook and said, right, open.
The fragile state of the global financial system is forcing both individual and institutional investors to rethink their strategies, and silver is emerging as a critical asset in this shifting landscape. The fiat credit system, which has been propped up by decades of artificial monetary policies, is nearing its breaking point. As cracks form, institutional players are making significant moves to shield themselves from the fallout, and silver is playing a key role in their strategies. Let's examine the vulnerabilities of the current system. At its core, the fiat credit system relies on trust. Trust that governments will manage debt responsibly. Trust that central banks can control inflation. And trust that the currency in your pocket will hold its value over time. But this trust is eroding. Rising interest rates, soaring debt levels, and ballooning deficits are revealing the inherent fragility of fiat money. Central banks, in particular, are acutely aware of this. Over the past few years, they've been aggressively increasing their reserves of precious metals, with gold leading the way. But silver is quietly entering the picture, and its strategic value is becoming harder to ignore. Central banks in emerging markets, where inflation risks are higher and currencies are more volatile, are beginning to view silver as a critical hedge. But it's not just central banks. Exchange-traded funds, ETFs, which allow investors to buy shares backed by physical silver, have seen rising inflows as the financial system grows shakier. When silver prices rise, ETFs typically increase their holdings to keep pace with demand. This creates a feedback loop. Higher prices drive more investment, which drives prices even higher. Consider this. In 2024, silver ETF returned to net inflows after a period of sell-offs, as investors began to position themselves for a potential financial crisis. Analysts are predicting that this trend will accelerate in 2025 as concerns about the stability of fiat currencies continue to mount. Institutions are starting to hedge their portfolios with physical silver in silver-backed assets, betting on its dual role as a monetary metal and an industrial commodity. But there's an even larger force at play: physical silver shortages. While ETFs are adding to their reserves, the physical silver market is struggling to meet demand. Over 80% of the world's silver supply is mined as a byproduct of other metals like zinc and lead. With mining output failing to keep up and industrial demand surging, a supply squeeze is almost inevitable. This isn't just speculation. It's already happening. In 2024, silver experienced a supply deficit for the fourth consecutive year, and that trend shows no signs of reversing. If institutional demand continues to rise, Prices could be pushed to levels we've never seen before. So why does this matter to you? Because institutions are often the first to act. Their growing interest in silver signals a broader recognition of its importance as a hedge against systemic risk. If you're waiting for silver to prove itself before investing, you could miss the wave entirely. The next step is clear as trust in fiat currencies continues to dwindle. Silver is becoming a cornerstone for both individual investors and financial institutions looking to protect their wealth. In the next segment, we'll explore the supply-demand dynamics in even greater detail, uncovering why silver's limited availability could drive unprecedented price gains. Don't forget to subscribe and share your thoughts below. Are you seeing signs of growing institutional interest in silver? Let's keep building this story.
Well, I think the silver price has for a long time been controlled. And my suspicion is that it's been controlled by China, because for China it's a staple commodity, really, and even more so given the global move towards photovoltaic cells. And of course, India is now getting into the photovoltaic cell manufacturing industry as well, so they're becoming a demand source. And I think that control over the price is actually beginning to be lost by China because of India coming into it. I discovered that this was the way it worked a long time ago because I was speaking at a conference in New York, back in about 2010, something like that. And it was attended by a lot of silver mines. And these silver miners are obviously, basically trying to promote their share prices, looking for capital, whatever. And I asked all of them one question, and that is, when you produce your silver, your silver doré, can you walk me through what happens? And they said, well, the first thing is the man from Glencore comes along, and he gives a value to the doré. The doré is then shipped off for refining. We don't know where it goes. It doesn't interest us. The point is that we're paid by the bank introduced by Glencore, and the bank would probably be JP Morgan.
Silver's supply-demand dynamics are setting the stage for what could be a historic price surge, driven by a perfect storm of increasing industrial consumption and dwindling availability. While silver's dual role as a monetary and industrial asset is well documented, the numbers reveal just how tight the market is becoming and why prices could skyrocket in the coming years. First, let's look at the supply side. Unlike gold, which is often hoarded and recycled, a significant portion of silver is consumed in industrial processes, making it unrecoverable. Industries like solar energy, electronics, and electric vehicles depend on silver's unique properties, and this demand is only growing. Yet silver production is failing to keep pace. In fact, mining output has remained relatively flat for years, and over 80% of silver comes as a byproduct of mining other metals like lead and zinc. Now, here's the kicker. If the demand for base metals declines due to slowing economic activity or changes in industrial needs, silver production could drop even further. This creates a supply bottleneck that amplifies the impact of rising demand. We've already seen the effects. 2024 marked the fourth consecutive year of a silver supply deficit, and experts predict the gap will widen in 2025. On the demand side, the numbers are equally striking. The solar energy sector alone accounts for nearly 10% of global silver consumption, and that percentage is expected to grow as countries ramp up their renewable energy commitments. Electric vehicles are another game changer. With each EV requiring up to 50 grams of silver, the automotive sector is becoming a significant driver of demand. Add to that silver's essential role in 5G infrastructure, medical applications, and consumer electronics, and it's clear that industrial demand is creating sustained pressure on the market. But industrial use is only part of the story. Investment demand for silver is surging as the financial system faces mounting instability. Central banks and institutional investors are turning to silver as a hedge against inflation and currency devaluation. Retail investors, too, are pouring into the market, with record-breaking sales of silver bullion and coins in recent years. This combination of constrained supply and rising demand creates the classic conditions for a price explosion. And unlike other commodities, silver has a relatively small market size, meaning even modest increases in buying pressure can lead to significant price swings. What does this mean for the future? Analysts are already forecasting silver prices to rise by 25% or more in 2025, with some even predicting it could hit $40 an ounce or higher. If geopolitical tensions, inflationary pressures, and financial instability continue to mount, the upside could be far greater. The question is, how will the market respond when these supply-demand dynamics fully collide? Will silver's price reflect its true value, or will investors who wait too long be left behind? In the next step, we'll take a closer look at the bigger picture, how silver's unique position in both the financial and industrial worlds can make it one of the most sought-after assets in the event of global economic collapse. Drop a comment below. Do you think silver's supply crunch could lead to a new record high? Let's dive deeper.
Sort of idea as silver bulls that gold, if gold breaks through this 2,800 level, let's say, then I think silver will be shooting off, because I think there comes a point where people look at it and they say gold's gone up, it's now going into new high ground, silver's been left behind, we got to buy silver. Yeah. So I think at that stage it rockets. It could be starting to rocket now. I mean, basically, it's kept pace with gold last year. I mean, they were both up about 25, 26% or something like that. And if I look at the gold-silver ratio at the moment, it's just under 90. I mean, that's crazy, absolutely crazy. On the industrial side, I mean, it's not priced as money. This is what that ratio is telling us. If it was priced as money, it would be under 20. Not priced as money. It's essentially an industrial commodity with, if you like, money sentiment in it. But it's been in deficit, according to the Silver Institute, for the last 4 years. So this is a commodity which, the whole commodity whole commodity complex begins to move higher on the back of gold. I think silver will be leading the charge.
As the pieces of this economic puzzle come together, one thing becomes increasingly clear. Silver is poised to become one of the most sought-after assets in the face of a global economic crisis. What makes silver truly remarkable is its ability to thrive in two vastly different worlds, the financial and industrial. This dual identity not only sets silver apart, but also creates unprecedented opportunities for investors who act now. On the financial side, silver serves as a hedge against collapsing currencies and runaway inflation. Historically, during periods of economic instability, silver has outperformed many traditional investments. The reason is simple. When trust in fiat currencies erodes, people turn to tangible assets with intrinsic value. Gold may be the first asset that comes to mind, but silver offers a compelling alternative due to its affordability and higher potential for explosive gains. In fact, silver often outperforms gold during bull markets for precious metals. This is partly due to its smaller market size, which makes it more sensitive to shifts in demand. When investors rush into silver, the impact on prices can be far more dramatic than with gold. Add to that the fact that silver is currently undervalued relative to gold, and you have the perfect setup for significant price appreciation. On the industrial side, silver's demand is deeply tied to the technologies shaping the future. Renewable energy, electric vehicles, and advanced telecommunications all rely heavily on silver. These industries are not just growing, they're accelerating, with governments and corporations investing billions into green energy and digital infrastructure. As this trend continues, the demand for silver will rise, regardless of the state of the broader economy. But here's the catch. While demand for silver is rising on both fronts, supply is failing to keep up. We've discussed the mining challenges and industrial consumption that makes silver harder to recycle. These factors are creating a supply crunch that will only intensify as demand continues to grow. This imbalance between supply and demand is why many experts believe silver could be one of the best performing assets of the next decade. It's not just a safe haven during financial crises. It's also a growth asset in times of industrial expansion. Few investments can claim to offer such a powerful combination. So, what's the play here? The answer is straightforward. Act before the rest of the market catches on. Whether you're a seasoned investor or just starting out, silver offers a unique opportunity to protect your wealth and capitalize on the forces reshaping the global economy. But what do you think? Could silver's dual role as a monetary metal and an industrial commodity make it the most valuable asset of the decade? Let us know in the comments below. In the final step, we'll connect all the dots and explore exactly how the collapse of the credit bubble could trigger a historic surge in silver prices. Stick around, you won't want to miss this conclusion.
Trump, I mean, he's not very much liked in Europe, except by, if you like, the people who are sort of anti-socialist, who are gathering, incidentally. I'm not saying that, what he's doing is all bad by any means, but on economics, I'm afraid that he's going to drive up the rate of inflation, which, put another way, is the purchasing power of the dollar going down. And who's going to want to buy the dollar? Who's going to want to fund government debt? I mean, at this rate, 5%? Well, it's 4.75% or something on the 10-year US Treasury. No, I don't think so. 5%? No, maybe not. You could be looking at 6-7%. And when it gets there, what happens to the arithmetic about the US government debt? Oh my God, it's getting worse and worse and worse. No, we just get out, don't get involved. And if anything, if we got dollars, get out and go and buy some real money with it.
This is the moment we've been building toward. How the collapse of the credit bubble could trigger a historic surge in silver prices. Let's connect all the dots and break it down step by step. The global economy is sitting on a mountain of debt, fueled by decades of loose monetary policy. Governments and central banks have printed trillions of dollars to keep the system afloat, creating an illusion of stability. But every bubble eventually bursts, and this one is no exception. Rising interest rates, soaring bond yields, and unsustainable deficits are putting unprecedented pressure on the credit system. When it collapses, it will send shockwaves through global markets. As we've seen in past crises, people will scramble to protect their wealth. Stocks, bonds, and cryptocurrencies, assets tied to the failing credit system, will plummet. Fiat currencies, already weakened by inflation, will lose their purchasing power. In this chaos, investors will turn to tangible assets with intrinsic value. Gold will undoubtedly play a major role, but silver has the potential to outperform for several reasons. First, silver is far more accessible than gold. Its lower price point makes it an attractive option for a broader range of investors, from retail buyers to emerging markets. This accessibility will drive a surge in demand as people seek to safeguard their wealth. Second, silver's supply is already constrained. With industrial demand for silver at record highs and mining output struggling to keep up, the market is ill-prepared to handle a sudden influx of investment demand. This imbalance will push prices higher, creating a feedback loop that accelerates silver's rise. Third, silver offers something gold cannot: critical industrial applications. As economies attempt to recover and rebuild after the collapse, industries like renewable energy, electric vehicles, and advanced technology will continue to grow. These industries rely heavily on silver, ensuring that demand remains strong even in the aftermath of financial chaos. But here's the key takeaway. Silver isn't just a hedge against collapse. It's also a vehicle for growth. Its dual identity as a monetary metal and an industrial commodity makes it uniquely positioned to thrive in both crisis and recovery. Let's put this into perspective. Experts are already predicting a 25% rise in silver prices for 2025, with some estimates reaching $40 an ounce. But if the credit bubble bursts and triggers a flight to safe haven assets, Silver's upside could be far greater. Some analysts believe we could see silver prices double, triple, or even reach historic highs as panic buying sets in. So where does that leave you? The choice is clear. Prepare now. Allocating even a small portion of your portfolio to silver could make the difference between weathering the storm and being caught off guard. Before we wrap up, here's a reminder. This is not financial advice. Always do your own research and consult with a professional before making any investment decisions. That said, the evidence is compelling and the opportunities are undeniable. Subscribe now to stay ahead of the curve as we continue to explore the trends shaping the future of the global economy. And let us know in the comments, do you think silver is the ultimate hedge against a collapsing financial system? Thanks for watching, and we'll see you in the next video.
That's literally within, what, $30 of the all-time high, which was back last early November. So, it looks like it's got enough momentum to go higher. But I mean, actually what's happening is that it's going lower. The dollar's going lower. Now, the reason the dollar's going lower is we've got a new president who's a spendthrift, and he's going to introduce tariffs against China and against the European Union in particular. The effect of that is that the consumer is going to have to pay higher prices. The consumer price index rises. What can the Fed do? Not a lot. It can't cut interest rates. And then you've got the budget deficit, which I think will be somewhere, it could be 2.5 trillion. And that's just inflation. That's debasement of the currency being injected into GDP. And non-Americans, foreigners holding dollars are watching this. And this is the assessment they're making. They can see that interest rates are going to have to rise. They can see that the US economy, while it appears on the surface to be growing, in fact, it's not productive. If anything, it's an inflationary